Welcome to Creekside Chats with Successful Real Estate Investors, brought to you by Steve Talker Capital, promoting prosperity and harmony to help you flourish in all areas of life. Join in as we explore the motivations and goals of real estate investors and how their ability to invest abundantly has provided them with the time and freedom to contribute to the world in a creative and thoughtful way. Now please welcome your host, Dr. Allen.
Hello, enlightened investors. Dr. Allen here, ready to step into the life of our successful guests so we, as fulfilled professionals following our calling, can simultaneously develop passive streams of financial wealth to flourish abundantly in all areas of life. Our guest brings us a life of inspiration as the principal of brokerage services for a brokerage group that specializes in multifamily, medical, and retail investment services. He has a broad-ranging background with extensive experience in development, leasing, property management, strategic planning, portfolio management, and financial analysis. Enlightened investors, let's get to know Andy Sutton. Welcome, Andy. Start us off, Andy, by sharing a memorable experience from your formative years that helped you to be the person you are today.
That's a loaded question, but I'll stick with the business side. Back in 2002, I was actually laid off of a job that they were downsizing. And during that time, I actually had an appraiser license, so I continued doing some appraisal work on the side. I actually was looking for a job on monster.com of all things, and I found a gentleman who was looking for an investment sales guy. And I'd been in real estate most of my life, mainly in the residential and the development side, some industrial office parks and things like that. But I'd never been on the investment sales side. So I met with this gentleman, took that opportunity, and here I am today. I haven't looked back. It's been one of the, unfortunately, and fortunately, the best things that ever happened to me. From 2003 on, I started doing the investment sales side. And then 3 years later, I partnered with another gentleman to open our own firm. We had probably 20 people working for us, and we ended up selling the company to Grubb & Ellis back in 2010.
Wow, quite a journey there. I think a lot of us find that the worst day in our life actually turns out to be one of the best days in our life. Where was it you were working?
Before, I was working for a residential real estate firm. I had 60 agents. I was mainly the qualifying broker of that particular location.
Quite a journey you've been on in the last 20 years. So tell us about a major fork in the road that has made all of the difference.
Yeah, when I first started in the investment sales side, I gathered that's probably what I would end up doing. And then as you're in that business and you're helping clients across the nation and worldwide, actually, you see how they're creating all this wealth. And when you're in this sales cycle, you're basically a salesperson. You're a consultant as well, but you're just making money on the deals you do. And when I started seeing that these investors were making a lot more by buying and selling assets, that was a major turning event for me when I started buying some myself with partners and eventually ended up selling those for a nice profit. And I think that's really been the major thing that I can say as far as on the workforce side that has really changed everything in my life. And that's why I'm trying to continue doing more and more of that.
So you said you were looking at comparing yourself as a salesperson to investors, and that was the stimulus for taking a different route. Can you chart out how you made that transitional process?
I basically made that when we opened our own firm in 2006. We had privy to a lot of properties that are out there on the market, and we saw one of my agents brought us this deal and said, you have to take a look at this. It was an in-town deal in Atlanta. It was only a 3-tenant deal, but it was a retail center in a fantastic location with some grandfathered zoning in it. And so what we decided to do is I just made the leap. My business partner and I said, hey, you going half and half? And I said, okay. And that's really how it jumped from there. So we ended up buying that one and holding that one and sold that one in 2012 or 14, I believe. But during the process, we ended up syndicating more deals, like an office deal downtown in Atlanta and a couple of other deals. So that just kind of sparked the idea of putting some of my own money into deals. And once you do that, you get more comfortable with it. And then you find out that it's really profitable. If you catch the cycle right now. Not all of them have been that way. The cycle had a big downturn in 2008 to 2010, roughly. It was a really lean years for all of us. And a lot of my clients lost deals or lost the properties that they had. And you just you have to watch that cycle come around and understand it. And that was unforeseen. No one could have ever foreseen that, but it did happen. And you just try to prepare yourself better for the next time, or just at least have more capital in the bank.
Yeah, that's a nice place to be if you can be in capital when those turns come. But sometimes you just have to roll with the punches. Right. You said there were 3 tenants in this complex. Compare that to some of the investments that you have done since. To me, 3-tenant deal sounds like a pretty risky deal. If one tenant leaves, that's a huge vacancy rate. It leaves you vulnerable. Why did you go into that with your first deal, and how does that compare to some of the projects you've had since?
Yeah, we jumped into that for our first deal is because I typically was selling more retail shopping centers at the time. And when you look at the shopping centers, you're looking at 9, 10, 12, 15 type of tenants. So a 3-tenant deal, we didn't think was that risky. If you left one, the other 2 still would cover the note. And we did have that happen. We had one tenant that had some candles in there, caught fire, burned a little bit, and we had to end up fixing all of this back up. So it really, that's one of the reasons we picked it, because we said, okay, we got 3 tenants, 2 tenants will cover it. Most of the tenants had been there long term. They had been there for 8, 10 years already. So we really felt like we could cover that note. And then the upside would be increased rents, and also that it had a grandfathered clause in there for 35 stories on this little parcel. So it made sense when you look at it. When I look at deals like that for myself and for clients, is I try to look at it from all different angles. If you look at it just from one perspective and say, well, if I lose a tenant, then maybe it's not a good deal. I always try to have a backup plan, especially after 2008. And I wasn't big into triple net lease deals, which are the single tenant deals, because I felt like if they blew out, then you had no income. So I've looked at a lot of different properties. I like multifamily a lot right now, just because the cycles are good, the rents are good. You're always going to have a tenant in and out, and I really enjoy that aspect of asset class as well.
So as you went into this, you knew with 2 tenants you could cover the note. That would make a difference. If one tenant moved out and you couldn't cover the note, that would make it a fairly risky endeavor.
Yeah. And I wouldn't advise that. I don't think that if you're cutting it that close, you're taking a huge risk. Now, if there are times my clients want to take that type of risk, but they're going to get a 15% cash on cash and a 25% IRR or something return. So they're gonna want something more on the front end coming in to take that risk. But we weren't considering that. I really felt like that we got this at a good price point, and that the cycle would increase and the rents would increase, and then it would work out. And thank goodness it did. Not all of them do.
We all know that. Thinking back on the last 20 years, I'm sure there's been good times, bad times. Enlightened investors, are you passionate about the work of your calling but have little time to develop a passive investment portfolio to secure your future? Even though you are blessed to work in your calling, would you like to have financial freedom to live more abundantly in all areas of life? If this is you, visit us at steedtucker.com. There you'll find free information on predictable, reliable, and passive real estate investing so you can develop financial independence for abundant living. While there, you can schedule a 30-minute phone call to talk with me about anything you'd like, or if you'd rather, send me an email at alan@steedtucker.com. I look forward to meeting and connecting with you. Share with us one of the most difficult setbacks, and how did you come through that time, and what did you learn from that experience?
The most difficult time was when the recession hit, 2008, so late 7, 8, 9, 10, roughly. It was extremely difficult. All the equity had dried up. Nobody was buying investment sale property. And it was really challenging. I'm sure it was for everyone. But my mindset was that I just had to get up every day and figure out a way to make some money. If I couldn't sell deals, guys were looking for wholesale deals, or banks were selling wholesale deals. And so I had to revamp the clients, people weren't buying investment properties. Thank goodness I had done some leasing in the past. So I just refocused what I needed to do to get a paycheck. And that was, I did some leasing to pay the bills. I ended up starting to talk to banks and wholesalers and people who were buying value add and buying vacant properties and looking at it from that perspective. But yeah, those were tough. And when they tell you to keep 6 months worth of income in the bank, or it's more like 2 years. Thank goodness I had enough, but just enough to get out of it. And so when you start looking at that's, you change your whole perspective on a lot of things. You look at just making sure that you have backup plans.
You said you've had a real different perspective on the whole industry since that time. What are the backup plans that you put in place as you go into different opportunities?
I think it depends on, it's a wide range there. Each person is different, so it depends on what they have equity-wise in their portfolio, if they have anything. Mine is to do more ownership. I owned several at that time, but when you have some tenants not paying, so you need to diversify that portfolio a little bit. Whether you've got some single net lease deals like this through this pandemic, Dollar Generals and things like that have just done fantastic. Grocery store anchored places. And so when you're looking at that, you try to look at, okay, what can I do to have some recurring income all the time and not just eating what you kill, so to speak. I just got to be able to have that and just have twice as much money as you think you should in the bank in cash. That's the way I do it. Otherwise, it's difficult, especially if you're a commission-based person for the most part, besides all your other investment stuff that has equity coming in or annual money.
What has COVID done for your business? What are the rentals like? And you said it was nice to have anchor stores during this period of time, but outside of anchor stores, what's really happening?
I can't believe I'm saying this, but it's been fantastic. And I've closed 2 deals in the last week, have another one coming in 2 weeks, closed several right before COVID. So the only time that we haven't had a delay was during the months of mostly April, May, June. And what I found from most of my clients, tenants, and mine as well, is some wanted a little bit of a forbearance. Some of them wanted to do a half rent, but what we ended up doing is allowing that to help out. And you have to be one with your tenants. You can't be hardball. It just doesn't work. Plus, it's not really fair. They didn't put themselves in that position at all. Now we still have a note to hit, but if you've got it diversified enough and you've got more income coming in, you can afford some of those to not pay full rent. You can still make your mortgage. At the end of the day, that's what you look for. And we would have them just add on. If they did 3 months half rent, we make them add on 3 months on the back end of the lease. So there's just a lot of creative ways that you have to get when all that happens. But what I am seeing is the cap rates are still relatively the same. Money has gotten better as far as lenders and rates and terms. Somebody just quoted me the other day a 70% LTV, 3.5 interest rate on a 25-10. That's pretty good money. To me, that's free money. That's cheap money. Mm-hmm. So when you look at all that, it gets the cash on cash better for the investors and the returns better. And I'm still seeing rents stay stabilized. I haven't really seen them drop that much. Maybe a little in certain areas. It really depends on the area and the asset class, of course. But for the most part, we're even seeing retailers that are expanding or adding another location, which I'm surprised. I'm really just surprised. But again, it goes back to, I think, the confidence with everyone out there in the market right now, which again is a little surprising for me. Like I tell my other colleagues, I'll take it.
Imagine here that you've lived a rich and meaningful life, and now you are on your deathbed. As you reflect back on your life, what memories fill you with happiness, pride, and satisfaction?
Yeah, that one actually hits home a lot more for me over the past year just because of some health thing that popped up on me. I've gotten a whole different perspective. I just turned 58. I'm not that old, but I'm not that young either. And over this past year, if you'd asked me before that, I'd probably have a different answer. Today, it's just enjoy every moment you have every day and enjoy what you're doing. If I didn't love what I do, and for my clients and for me and helping other people in this industry, I sure wouldn't have done it. I'd have found another job in 2008. I could have done anything. I could have done work for someone. And I just chose to stay in there. Today, I just tell everyone to just enjoy every moment of every day. Stay in the moment, stay in the present, and enjoy what you're doing. Because if you don't, you're not going to be happy. You're not going to be happy around other people. And life is really short. And you just never know when something's going to pop up or not pop up. But either way, I'm thankful. I'm thankful for my son. I just got back from San Francisco seeing him. He moved out there a couple months ago, and he's starting his life out there. And I'm really happy for him. I'm happy for my family and where I am. But I get the most joy out of life helping people and mentoring young men or women in this industry. And then personally outside, I do mentoring that's not related to real estate at all. And it's just, to me, that's some of the best. If I ever left this place, I would smile and felt like I hopefully put a loving footprint on somebody's heart. So, yeah.
Wonderful. Let's go into our final round. How can we, as socially responsible, busy income earners, continue our professional involvement and at the same time achieve financial independence to be more and to do more so that we can have a bigger footprint in the world?
Yeah, that's a great question. And I think that we are obligated to do that as individuals. I think it really helps to give back. And that's, again, what I had mentioned a little bit earlier, is that I do a ton of the giving back. I really like to bring people into this industry who want to get into it. They can't have an opportunity to say with a bigger shop. Because I remember when I was thinking about going in this business, the larger shops, do you have a book of business? No, I'm just trying to get started. And if you don't have a book of business, they really don't want you. And I understand it to a certain extent, because there's a lot of money, time involved to get somebody up and running and ramped up. But I don't know what it is. It's just something that I enjoy doing. And I do it both in this industry. I have one gentleman that I've had no sales experience. He's a mechanical engineer, but he's a bright young guy, and he's smart as a tack. And so I brought him aboard, and I'm teaching him sales techniques. I've taught him everything about this business. And he just closed his first deal yesterday. So that's great to see. And then so I'm getting more people that are calling me, wanting me to help them walk them through that process, because I can't pay them. They typically will do their job and then do all this and fill it in a part-time until they can get things going. And I don't mind doing that, because no one out there is going to help out. And so I enjoy watching them grow and be able to give back that way. And then outside of that, I've been mentoring this young man since he was 7. He's 19 now. So I'm trying to get into college or trade school right now. And of course, with the pandemic, it's a little bit difficult. That's been one of probably the biggest joys in my life, is be able to help mentoring them, both professionally again and personally. So,
what is your best piece of advice for the busy professional who has never invested in passive real estate syndication, but they've expressed an interest to begin?
I think they should treat it like anything. If you're going to buy anything, it's similar to an interview. If you should ask that person how much experience they have, what have they done? Ask them every question you can think about. And secondly, be patient. You'll have a lot of investors thinking it's a quick fix or it's a flip of some sort. It doesn't work that way. You might get lucky and do that. For the most part, they thirdly need to understand this a long-term hold. It's a 5, 7, 10-year hold. And it just depends, because it depends on, you have to ask, they need to ask that person what the goal is. What is the goal of that? Because if they're looking for something that's long-term, then that's fantastic. If they're looking for something that's short-term, 5 years, well, that next cycle may not be 5 years. So it may not make sense if you're buying that to eventually sell for a profit. It may not be the case. It may be 7 years, it may be 6. So you need to have somebody that understands that and been around a little bit and seen the cycles and understand what to look for. No one has a crystal ball. If they did, we would all be on the beach drinking an umbrella, I think. But yeah, it's just to be patient.
Good pieces of advice, Andy. I think you've already answered our last question, but what are you doing as a successful real estate investor to make the world a better place? And you've already told us several things, that you like to mentor people coming into the business, but you also work with people on a personal level. But is there anything else you'd like to add?
Maybe if you just get out and enjoy some activity that you individually enjoy, I think that you're happier and you're more content, and that's actually going to radiate into you being a better person for the better place in the world out there. But yeah,
What you're saying is start with self, and if you start with yourself,
I think we should start with self
and everything. Yeah. Great advice, Andy. And thank you so much for being on the show. It has been a pleasure meeting you and a pleasure being with you today.
Thank you, Alan. I appreciate the time.
Thank you for joining us on Creekside Chats with Successful Real Estate Investors, brought to you by Steed Talker Capital. For more information, as well as access to our free ebook on enhancing your well-being through real estate investing, be sure to connect with us at steedtalker.com. As part of our efforts to make the world a better place, Steed Talker Capital contributes to activities and organizations committed to better understand the equine and enhance the humane treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures, great and small, flourish abundantly. Connect with us at steedtalker.com.